I just would like to introduce Brother Fahim. Fahim Hamid is an economic development practitioner, lecturer, and trainer who recently completed his master's degree in Islamic finance at Guidance College. He has over 30 years of experience. He has worked with small businesses, financing, business incubator, community development, credit unions, commercial revitalization, community development associations, and chambers of commerce. Hamid is interested in the application of Islamic finance tools and principles to community development, including community development financial institutions in the U.S. He is president of the American Community Development Institute, and his educational background is urban planning, journalism, law, and Islamic finance. Welcome, Brother Fahim Hamid.
Alhamdulillah. A bit of a hat switch here for a moment, so indulge me. I'm pleased and excited at the overlap in topics. I see a number of people with a keen interest in these issues around income inclusion, addressing the day-to-day needs. So I'm going to follow in that tradition and take another stab at this. I will say to you that my presentation is a little bit different. I did this part of as an internship project. I was given the proposition of what is the prospect of developing or having the feasibility of an Islamic credit card in the U.S. And oh, by the way, are there any other credit cards? And we also want to make sure there are income inclusion factors built into it. So we want to see if it has the capacity to do credit building with that. So I very slowly said, okay. And what that meant was it was a journey, and one that I don't regret at all. But I didn't go at this as an Islamic scholar. I went at it as a student with as many questions, to ask the questions. What I discovered coming out of it is that there were actually more questions than answers. That wasn't a turnoff for me, but that was something that just gave me a reason to move forward. So bear with me in that regard, please. It basically was a primary assignment, the level 1 feasibility assessment of Islamic credit cards in the U.S. I was asked to look at Islamic credit cards in the global market, to make comparisons and see what they might look like in the United States. I was asked to look at, from an operational standpoint, credit card networks and operations, and specifically whether or not those would be Sharia compliant. I was asked overall to look at the issue of Sharia compliance of each of the cards that are used currently in the nation, and examine them from the operational standpoint, all of the fee transactions, and what that might or could look like in the United States. I was also asked to look at an Islamic credit card from a builder as a tool for building credit. And then finally, what I wasn't asked, but what was raised immediately is the applications of fintech, which you've heard it spoken to a lot today. So we went at it like that. Let me just start by noting that currently there are over 1 quadrillion credit and payment cards in the United States alone, showing currently a debt, or at least as of 2020, a debt of $820 billion. And needless to say, that debt is continuing to incline, to increase. And you need to appreciate that's not an accident. The credit card industry operates, the business model for the credit card industry is that we will provide you access to credit in exchange for fees and interest. And that's the business model. Obviously, that's problematic for us as Muslims. The challenge, however, is that everybody wants a credit card, including Muslims. So if you ask them, they're like, yeah, and folks try to be diligent about that. Many people say, well, we don't have any alternatives, and they use the excuses, explanations of Hajjah and Darura, and say we don't have any alternatives. I will say I spent a lot of time looking at the applicability of those justifications, and in some instances they apply, and in some instances they don't. Nevertheless, Muslims want the convenience and efficiencies of credit cards. Why? Because it just makes more sense than carrying cash. What I did discover in some of my research is that if given the option of having a credit card that was Sharia compliant, most Muslims, and I think the number that I ran across was somewhere in the area about 70%, would opt for that. They would use the Sharia-compliant credit card if such a tool was available. So that was encouraging, because it tells me that that there's a potential market out there for a product like that, if and when it could be developed or it came about. I will note that the issue of Islamic credit cards is a continuing debate among the scholars. The issue currently is that conventional credit cards are not Sharia compliant. That's pretty well established law in Islamic fiqh. The question is, what is workable? So that's what we tried to explore. So the first question is from a Sharia standpoint is, what is it that makes a payment card Sharia compliant? And I note the term payment cards because all payment cards are not credit cards, because we have some debt cards which are usable in Islam, but all of them are not there. But the key things that come into Sharia according to AOFI standards number 2 and the AOFI standard number 61, which is the restatement of that in 2021, is that there's no interest, that there are no fees for revolving credit facility, there are no late payment fees. And from an operational standpoint, that became quite a challenge. Just how do you get around that, particularly from a profit standpoint for the bank? There are no cash withdrawal fees, that the spending must be fixed, that purchases are Sharia compliant, that gold and silver and currency is only covered with can only be used for covered cards, and that from an Islamic bank standpoint, they can only charge fees for direct actual administrative costs. Now, in and of itself, this seems like a host of restrictions that would make it virtually impossible to do anything other than an interest-bearing, conventionally financed payment card. So if we look at what's in the market currently in terms of payment cards, basically there are 5 types, and some of this, of course, is basic information, but we have a regular payment card, you have a secured card, a charge card, a prepaid card, and a debit card. Now, quickly, if you look at sort of the characteristics of each of those cards, because again, our question was how much of these, how many of these cards, which might be Sharia compliant, where might they be Sharia compliant, and where are they definitely not Sharia compliant? So if you looked at each of these, a regular credit card is basically an unsecured card. That is, it's a revolving credit facility, has credit spending limits, and charges interest on unpaid balance. That's the card most people have. If we looked at it in terms of it's a credit capacity, but for all intents, but according to Sharia, it is non-Sharia compliant, and I'm referring to the middle column there. Secondly, if we look at secured credit cards, very similar to a revolving card, except that it has a revolving credit, there's a deposit required, and sometimes it varies from institution to institution whether that deposit needs to match the amount of the credit limit. Typically what happens from an operational standpoint is that a deposit is secured, and then with a history of good credit, then that credit limit may be extended, but that's the bank's choice. There's a credit limit attached to it, but again, there's interest on the unpaid balance, which makes it non-Sharia compliant. I'll deal with the bottom two because the third one is pretty interesting. Then there's debt, a debt card and prepaid card. Both of these are considered by fiqh scholars as settlement cards as opposed to credit cards. And as such, they're both Sharia compliant. The debit card has no credit capacity, and the amount of expenditure is limited to the cardholder's money that's on deposit. Similarly, with a prepaid card, it has no credit capacity and is preloaded. The amount is determined by the preloaded amount by the cardholder. And both of these, as I said, by definition, are Sharia compliant. The problem with that is that those cards are not useful in terms of building credit. The activity on those cards are not reported to the credit agency, so they don't help the low income, the person who has lower credit, build that credit capacity at all. So they're not useful in that regard. They are useful as a convenient alternative to cash, but not as a way to build credit. The one card in the middle is the one that has perhaps some potential, and it's one that IOFI is recognized as such. And when you look at what the scholars have said in IOFI, they say that the charge card can be used as both a credit instrument or a settlement instrument. It can be Sharia compliant or not, and a lot of that depends upon how it's used. And as a matter of practice, what we see a lot of is that charge cards are used, and just by way of definition, charge card typically is a payment card wherein if you make an expenditure But if you pay the amount within the designated credit period, you're not assessed interest. Now, that's the case with most cards, but that's the operational format of a charge card. As such, it doesn't have any revolving credit. There's no credit limit to speak of because the expectation, again, is that you'll pay the debt on time. And then there's no interest. And so what Sharia scholars have said is that basically this is okay. And as some scholars have said, and I would include Dr. Manning, as he points out, it's okay, but it's important. It's okay in the sense that if you comply, if as a customer, if you manage the card in a certain way, it's Sharia compliant. And Dr. Main helped us to understand that that includes the consumer having the responsibility of making that payment on time and making sure that it's compliant. The question obviously comes up, well, what if the payment is not made on time? Well, most companies heretofore will basically assess an interest, and which then kicks that into an interest-bearing relationship and make the card non-compliant. Nonetheless, what the FIC scholars have decided is that the charge card is Sharia compliant with the caveat that it has to be managed carefully. The challenge, of course, is that that's on the consumer and it's not on the card, the person who supplies the card. So that was one other challenge that we had to look at in terms of trying to figure out what the options are for us. Now let's turn for a minute to what actually exists in the world market in terms of credit cards. Currently, there are 4 Islamic credit cards that are used overseas. None of these are used in the United States at present. The 5th one, or actually the first one listed there is Bay al-Alim, which was, and I have examples of what those models, what the operation of those, we will go into in a little bit, but basically Bay al-Alim was stopped in 2012. There were a lot of concerns from FIC scholars that the card actually did not comply with Sharia in that it essentially represented a sell and a buyback transaction, which, according to my research and the research of a lot of scholars, violated a lot of principles of Islam. It was stopped in 2012. The second card that's in use, though, fairly widely is what's called Tararuk, which is basically where the Islamic bank buys a commodity from a first trader, it resells that commodity to the customer for a cost and profit, and then it resells that commodity to a second trader for cost. The Islamic bank then holds that money as a credit facility. The key here and the challenge here is how do you create a credit facility that will constitute an asset backing for the credit card and also provide a level of collateral for the bank's extension of credit, if you will. And that's the challenge with anything. That's the alternative to extending credit for a fee that conventional banks hold. The question is it suitable for the U.S. both in terms of as a payment card and then in terms of its Sharia compliance? My research on that indicates that possibly that it's maybe it's suitable. There are Sharia compliant issues, and there are definitely operational issues in terms of whether it could comport in that. And by the way, I should note, none of this assessment examines U.S. regulatory concerns. That was another level of that we didn't even deal with in this study. And so I noted as a possible concern, but it didn't deal with that. Taruks have been determined to be Sharia compliant in many Muslim economies in different places around the country. Not all, but some of them. And I should note that Taruk, as well as all of these, most of these other cards are used, also have collateral backing. So they use this model to build collateral backing. So it's a possibility is what it is. It exists in some places. Not sure it might exist here, and we talk about that a little bit more. The third option would be what we call USRA, and basically that's a credit card model that simply uses a wraparound fee for the goods and services and the purchase and cash expenditures made by the customer. Now, on its face, this particular card is the most simplistic, it's the most transparent. It simply says, go out and use the card, credit holder, spend it as much as you want. We're going to charge you a fee either determined on a flat rate or based upon what your credit worthiness and your credit history can dictate. And as long as you pay that periodically, you're fine to use that card at will. The challenge for that, of course, is that is premised on a number of things, including not the least of which is the credit risk, the credit behavior of American consumers, which is very, very different from that in other countries. The responsibility to make payments, which is very, very different in other places. And then keep in mind, the notion of credit and interest in the United States is not just, credit is actually a very, even though it's prohibited in Islam, it's actually a very efficient tool for managing risk. It's extremely efficient for this system for managing risk. It's problematic for us, but it is efficient because it allows that system to allocate the risk in certain ways that at least keeps it out of the hands of the bank holders. UJRA also gets around that because it then basically says, we'll settle a fee, and you pay the fee, and we'll provide you credit capacity. The problem with UJRA credit cards is that they by definition, have to be very high. It just only makes sense that if a financial institution is going to extend that kind of credit risk, it has to charge more to cover its risk. The same way that a conventional bank would increase their rents or have rents to cover its credit risk. So the answer to that, whether it's suitability for us, is yeah. And I say it like that, yeah. It's a simple structure, but it has high fees, but it also has a serious problem of what I think would be product disadvantage, especially when you start to compare it with other cards that are on the market. So, but technically it could work from a Sharia standpoint, but there are issues with it. The fourth one would be community murabaha, which is basically looks at purchases of goods from a vendor and then resells them to the customer at cost plus markup. Based upon the murabaha model, is fine. The problem is that it's only good from a fixed standpoint for the purchase of goods and commodities, and it doesn't allow cash withdrawals. So I think you could pretty much say that's dead on arrival if you're trying to market that in an American society. Similarly, if you talk about a card based on service ijara, which purchases services or the use of from a vendor and then sell those for the right to use the services to the customer, rents plus profits. Again, it's only for service. Same reason, it would probably be dead on arrival if you try to promote that in a U.S. market because you need to have access to cash withdrawal. So the question is, well, what do you do, right? One of the things, and we by the way, did not have an answer to that, as I said. My responsibilities was to identify the questions, identify the issues. I will add, for example, one of the issues that we also tackled that's not in this report is we looked at the issue of what is the relative Sharia compliance of payment processes, cards like Visa, AM, MasterCard, and a lot has gone back and forth. And basically we found, FIC holdings that says payment processors in and of themselves are Sharia compliant because they're essentially moving money back and forth. However, you must be aware of what the payment processor itself is doing at the second level because that could make them non-Sharia compliant, and technically, according to many scholars, that would make them not eligible as a resource that you could use to process your credit cards. So these are the kind of continuing operational issues that you have to take a look at if you're even considering the idea of using a payment card, which, by the way, all payment cards use some form of payment processes. It's just how the world works, how the world we live in works, right? The other issue that we took a look at was this issue, and it was a hypothetical in the sense that was, how do you manage credit card holder risk? The question on the table was, conventional credit cards work fine for people who are high net worth or who don't have bad credit. How do you work with people with low credit or who are building credit, and then how do you help them come out of that situation? And so what we discovered in drilling down on that is that the biggest issue for the financial institution is managing credit card risk. So the Islamic Bank itself takes there's a significant non-payment risk with Islamic credit cards for moderate to low-income customers for the reasons I just alluded to, right? And so securing deposits as collateral against guaranteed payments made against the Islamic Bank as a credit facility is a major hurdle. That is the most immediate, not the total, but the most immediate solution to that, which basically puts it in the space of being a secured card, but without credit capacity. So that was the challenge that we found ourselves looking at. The conversation then evolved into, well, what is it that we need to do to build if we accept the responsibility of building the credit in order to meet our income inclusion goals. How do you do that? And there were a lot of discussions that took place. I would tell you one of the things that I came across, having worked in the conventional community development industry for over 40 years. What's typically used in those cases is looking at third parties to cover that kind of investment cost. Things like looking at ways to provide investment saving accounts, ways to help the bank customer itself identify funding, even third-party funding that they can use to collateralize those accounts. And that's typically used in the conventional markets. And it's something that could be applied in Islamic financing. So it's something that we took a look at as well. So out of the number of conversations, we came up with a model that we think could make sense. We did not push it to the standpoint of saying this should become a card. It was a discussion piece, and hopefully one that we can get some feedback on. But basically, the model has to do with looking at a charge card with a deposit. And I should note that the model itself, we hope, meets all the Sharia compliant requirements. The deposit would be used as a collateral to guarantee payment made against the bank's credit facility. It includes a credit limit as required. The credit limit would be equal to the amount of deposit, similar to like a prepaid card. It may be greater depending upon the cardholder's creditness, and it's also a level that could be adjusted by the financial institution if they find, for example, that the cardholder has a good payment history and is otherwise creditworthy. You might note that typically in conventional financial institutions, this is done all the time. Even a person with quote-unquote bad credit start out with a particular company, you have a good payment history, good use of credit. Over time, you not only will have the opportunity, but you will be asked to increase your credit capacity because they want you spending more money. So the next thing would be no interest on purchases or cash withdrawals within the credit card. Cash withdrawals itself are seen as Qarda Hasan. During the fixed period, there's no fees are charged by the bank. I'll skip through some of these. The question, again, when you talk about managing, one of the big issues is what happens for people who don't pay their payments on time. According to Islam, you cannot charge them a fee for that. And more recently, the scholars, Ayufi has said that, well, you can charge fees, but only for the actual direct costs associated with managing that account, but not as a penalty for late payment. And this is a challenge in Islamic finance. This is one of the real challenges that we have to look at, not only as related to credit cards, but other kinds of debts. So the proposition is that the unpaid balance may be extended for up to 2 payment cycles. Afterwards, the terms may be negotiated for back payments or the account may be closed. I will note that in our research, we discovered that there are a number of Islamic financial institutions overseas that actually uses this approach, notwithstanding what fiqh says. When they have people that don't pay their bills, they go to them and say, listen, you haven't paid your bill, we got to do something. And that's, at least to me, reasonable. That's not unreasonable. It's not unreasonable that you need to figure out a way to get your money back. Introduction, so again, we're talking about a credit builder payment card. Introductory credit limits of $3,500 per card or some amount that approximates what makes sense for low-income income earners, wage earners. And then the account, and as I noted, the importance of this kind of account is that it's an activity that could be included in CURV report, which is what the credit reporting agencies look at for building credit. And again, I jumped over that a little bit, but why do you need credit? You need credit because you need to be able to rent hotels. You need to be able, all of the things you use in day-to-day life, including Muslims, requires a credit card. If you don't have it, you have a different kind of challenge. We talked about a target audience of a credit score of less than 500. And so that was just one option that we threw out there. Again, this was not anything put in stone. It was just, how do you deal with the immediacy of this? This is a conversation that's continuing. Let me note that one of the things we came across and took a look at, it became very apparent that fintech would be real important in terms of how we approach this work and whether or not it would even be used. And just by way of observation, fintech, of course, is quick and convenient and less expensive. It's an open banking delivers product, services, and data directly to the community. More importantly, what we discovered is that through the use and application of fin technology, we could actually broach the conversation of how do you embed Islamic contracts into payment cards, which could be used over a mobile phone, which makes all the sense in the world today because young folks don't use banks anymore. In fact, their preference is actually, I looked at some studies, and most of you could attest, young people really prefer not to talk to people at all. They just want to push buttons and be done with it, that's the reality, and so it had to be dealt with. So going forward, what we came up with is a set of implementation concerns. And again, I'm acknowledging that we knew going in, very quickly we understood that this would raise more questions than answers. But what we discovered very quickly in terms of implementation concerns is that the charge card is a responsibility of the cardholder, that UDRA has the highest fees and costs and risks, and cost of risk. There was a model that I didn't present here, but we spent some time discussing, and I will encourage you, it'll be in the report, but it was a model by the economist Dr. Cuff that looked critically, I thought, at the issue of a model based on a murabaha combined with a service ijara that included a letter of credit with the wakala. Now, it's a lot to talk about here, and I just couldn't take your time to do it, but it's something that I would encourage you to do, and I certainly will make that citation available for you. But it essentially is a credit card model. It's not a credit card, but it's a model that basically meets I would say 95% of the operational needs of credit card users today. There were a few disadvantages from the standpoint of how do you manage payments. But it's something that I think should be looked at, and hopefully some further research would be done on that. The second category of implementation concerns had to do with regulations. That is that the bank controls of non-Sharia compliant expenditures, managing delinquent accounts, and as I noted here, we didn't look deeply into this, but U.S. restrictions against trading commodities, and those would be considerations for the Commodities Futures Traders Commission, as well as the SEC. The third thing is we talked about fintech, and then finally, and you've heard this alluded to quite a bit today, the idea of marketing. The notion, what became very apparent is that a new Islamic credit card product that could and should be marketed to Muslims as well as non-Muslim markets. I think it's only expedient that you talk about non-Muslims as part of that market. The interesting thing about it is that this was not an arm twister for younger folks. The marketing to younger consumer with mobile wallets, that was a done deal. And they didn't care whether you call it Sharia compliant, riba free. They really didn't care. As long as it had certain features that made their lives easier, as I said, that would be an easy sell for them. And then the other thing that we looked at from a marketing standpoint is how do you sustain the growth beyond the primary and secondary markets into different categories of consumer credit card users. And so those are things that were still being talked about. I will say in terms of the conclusions that we came up with is that what could be done theoretically is that you introduce a debit and a prepaid card first, because those are already used by Islamic financial institutions already. And again, I didn't say this, but let me be very specific. We're talking about the U.S. market today, right? And so we're not talking about abroad, and we're not talking about whatever might happen from a regulatory standpoint. But what could you do in the United States today? The first would be to introduce a debit and prepaid card. The second would be to introduce a charge card model with a deposit and no interest on fees, which would be Sharia compliant. The third would be an option to use the UDRA card for the general public. Again, I noted that what we saw there would be product disadvantage would be the major problem. From a credibility standpoint, the idea of a charge card with a deposit could be Sharia compliant. It could address that concern. And again, as I talked about, market the Islamic credit card as an interest-free ethic banking product to the larger public, as opposed to a Muslim credit card. And we just think it sells well. And then, as I noted, market aggressively to younger consumers with mobile wallets, and the use of fintech strategies. And just to close out, let me note that what we discovered was that there are a lot of areas that still needed to be looked at. One is that the fintech applications on Islamic credit card products and services, the use of Tawid and Garama, which is fees and penalties as deterrents against Islamic credit card account defaults. These are strategies that are used by different Islamic banks. From what I've seen, the scholars have some differing opinions about how sound they are. The question, we would have to take a look at that from a fixed standpoint here and see whether they could be applied. The third issue would be managing and measuring credit risks among U.S. consumers. I heard someone mention earlier, but the point is that I think there needs to be some unique study around looking at credit risk behavior in the United States for United States, U.S. consumers, around how they would deal not only with credit and default, but also an Islamic credit card. There's another issue that deals with whether or not it's appropriate to donate Islamic finance institutions funds to match client deposits from the delinquent payment fees. We talked about that as a potential source of how to low-income customers match their collateral deposit savings that they put together. And the question came up, well, you know, we see all the time where Islamic financial institutions make donations from their delinquent account fees to third parties, nonprofits. Could that not be donated to a third part, to a nonprofit institutions whose mission it is to collateralize with the client deposit that could be used, add with the client funds that could be used to collateralize their credit card account? Topic for conversation. And then finally, we looked at the role of, generally the overarching concern is whether the role of Islamic financial institutions in income inclusion, debt reduction, microlending, business development, and community development. So it was and so that concludes the topic. I will note that it was a very rich process, a very long and lengthy process, and I'm serious when I say we raise more questions than answers, but I think they're all good questions in terms of how do we move this process, this conversation forward of how do we establish Islamic finance in this country, and one that I certainly would welcome everyone's participation in moving forward with. Thank you. We do have a few questions, I'm sure. Yes, sir, in the back.
What are we going to do about FICO? Because that's really the centerpiece and the main issue. As it pertains to dealing and taking on FICO, the young lady spoke about the buy now and pay later. Many of them introduced that model in America to take on FICO and use an algorithm versus using FICO scores. And when they came to Wall Street and went public, a firm and the like, it didn't do so well because they didn't manage that algorithm when they were not getting people making those payments back. So FICO is the real centerpiece that one has to look at to get rid of the FICO system, and then everything surrounding credit can further be applied. And Michael Milken, as I'm sure you're very familiar with, he studied this at the institutional level, i.e. he came up with junk bonds, that risky investors are really not risky if you collateralize it and put them in baskets. You can manage that risk. And when you put it in a basket of low credit score people, actually the study that was done out of Wharton School of Business found out that they really are not that risky.
And so your question is?
So the question is, have you looked at the FICO part of it? How to address the FICO?
Okay. FICO, so the answer is that FICO is one of the elements that we looked at, and it has to do with how do you measure up in terms of credit worthiness. One of the challenges that immediately came to mind is that some people, there are segments of the population that don't even hit the radar of credit worthiness. And as a result of that, as a result of those levels, they don't attempt for credit. So a lot of people go unbanked. A lot of people function very well in this country without credit cards. I mean, they use payment cards, they use debit cards, they use other forms to get things done. But as I noted, there are also good reasons and good uses for credit cards. So inasmuch as FICO is a concern, it wasn't the preliminary concern that we felt we had to deal with. What we felt we had to deal with is getting people to a point where they feel that they are credit worthy enough to even apply for a card. And then, of course, the secondary step is how do you build that credit worthiness to another level?
And I think that credit worthiness, the credit worthiness threshold that people are not feeling they are creditworthy. Studies are showing that is because of a FICO score. And when you look at that low threshold that you're looking at in terms of the consumer, their FICO scores is low. And so as a result of that, they are opting out because they know they're not credit. Alternative system other than the FICO system, they absolutely go for it.
Yeah. Well, I agree and disagree a little bit. I think you're right in terms of your assessment, but I don't know that people would absolutely go for it because I think there's some other situations, including the issue of Sharia compliance. But again, I just note that there are any number of folks who consciously avoid the credit system altogether and do relatively well in terms of managing their day-to-day lives. I think it's an element that has to be addressed. I certainly would like to see them moved, at least have the capacity to move into having credit in that way, because that gives them more flexibility in a U.S. economy. But again, I appreciate the questions. Very good. We had one or two more questions before we break. Did I see another hand?
Right here. Assalamu alaikum, Brother Fahim. Very full research there. You know, I had a question that came up because of the idea about having this card but not being able to use it on things that would be considered against the Sharia, right? That seems a bit anti-American in terms of someone having a tool and then being told what they cannot use, vis-a-vis on top of that, things that will be probably a lot of disagreements in terms of what is Sharia compliant. If I'm going to an ABC store, but I'm buying a bottle of Coke, and then I go in there, I have my credit card, it doesn't get through, you're going to have a lot of issues in terms of America. So how can we, as a kind of an industry, you know, kind of separate, you know, offering Islamic services, right, but putting this wall up between what they do with it, because in order not to be kind of intrusive, but still at the same time being able to offer these services to Muslims, because you really can't say, oh, this is going to be offered only to the Muslim community, not to Christians, Jews, and Sikhs, and Hindus, so on and so forth.
Excellent question, and one that which, when we looked at that, we came up with a couple of things. One is that the Muslim consumer understands him or herself that certain things should be prohibited. Now, the question is, well, how do you manage? Is it the obligation of the bank to manage behavior when the Muslim is off duty? Right? And the Sharia scholar says yes in that regard, in the sense that they're saying that Islamic financial institutions do have some responsibility for managing that behavior. As a matter of fact, the fiqh holdings recently, some recent holdings have said that the Islamic financial institutions may actually instruct their retailers not to make certain transactions for non-Sharia compliant products. Okay. Last question. Not to make expenditures for non-Sharia compliant products. The interesting thing that we found is that through the use of fintech, some Islamic banks have actually coded their credit cards such that if there's an attempt to make a purchase of a specifically non-Sharia compliant product, then the card declines. Now you say, well, what if I go to a store that has, you know, a number of things, popcorn, food, and beer? How do you make that? How do you make that distinction? Well, fintech hasn't answered that question completely for us. I think it's a legitimate question, but from a principle standpoint, from an operational standpoint, what most of the research that we found is basically saying is that yes, it's part of our operational system, just like we operationally look to ways to restrict the use of riba, is that also we can restrict Sharia compliant, non-Sharia compliant purchases. It's a good question, and it's certainly one that applies in every day, but that is the way folks are handling that so far. If no other questions, then I think we're going to close this part of it. I appreciate your attendance, and again, I fully welcome any questions and follow-up people might have. As I said, this is a continuing conversation for us. We don't present this as a set of answers, but we present this as a challenge, and hopefully we can build upon that going forward. Assalamu alaikum.